Hi, folks. Do you know how to make a $1 million trading account? Start with a $2 million. You'll never make a gazillion dollars as a trader until you learn to protect your account and follow your trading rules. Enough said. This is Tim with Trading Strategy. About one of my favorite trading strategies, the ascending, and conversely, the deep angle. Sorry, but the gazillion dollars is totally up to you. This is what an ascending triangle pattern looks like. The most important part is the trend into it, right here. And you need a strong resistance level. Then you're looking for price to wind up with this rising support trend line, higher lows, and keep on winding up. And then sometime before it reaches the apex, it will typically break out in the direction of the initial rally or the initial trend coming into it. So think of this like a big spring. Nice flat top like so. And then this is winding up like a big spring, and we're waiting for it to break out. I call this I'm sorry, you guys can't see the video. Give me just a second. I'll see if I can work that one out for you. Okay, is that better? I apologize. Has that got it? You guys see that? Cool. Okay, well, I'll start this over. Trend in. Got to have a trend in. If you don't have a trend in, nothing. Okay. Then this is where it winds up like a spring. You want a nice flat top and then higher lows. And then sometime before this apex, it'll break out. Okay. Then an ascending triangle pattern. You'll see them a lot. But there are a few criteria that you want to make sure it meets before you think about it. This is a ascending triangle pattern. Yeah, I was a little bit lazy. What can I say? It's identical in the opposite, downtrend in. Nice support, nice flat support level, lower highs, and then a breakout, typically in the direction of the incoming trend. Okay. What can I say? I'm lazy, but it's accurate. All right. Always remember the incoming trend is the most important part of this. Example of when you don't have the incoming trend. Okay. Triangle, you would expect price to break upside, but you need to have incoming uptrend. This is right inside a trading range. You know, it did break, it did do some things, but you need to find this in the context of a trend, not context of a trading range. Okay. That's the important thing right there. Okay. Looking for a setup with a nice incoming trend. Here's an example of a really nice setup. Incoming trend. Nice flat top. Higher lows. And then a breakout to the upside. Now, it's always good to confirm. Anytime you trade, you want to have multiple indications in the direction that you want to go. And this is a good suggestion, use the RSI. Look for a bearish divergence during the course of this winding. We're looking for it to break to the upside, so we're looking for a divergence on the RSI to confirm this pattern. I'm going to show you a few examples that I've picked out. I picked these out earlier today, so you can see them on the charts exactly where I found them. The first one is this USD hourly chart. This is actually 4 hours ago. Nice and in, support level, lower highs. Okay, it's never going to be perfect. Okay, don't worry about hitting the points or the bodies of every single candle. You can see this. What you're looking for is this appearance right here. Okay, a nice flat bottom, a nice lower highs. Okay, and then at some point you see a breakout. There's a divergence. This is probably not the perfect setup. This is a setup right here that I would probably think hard about, because this divergence is not really strong. Okay, this RSI is not moving up too dramatically. So plus the fact that the support level here is a little bit iffy because we had this hard push through it and then only a couple of points. So this is an example of one that you might want to think twice about. Like I say, you're not looking for perfection. You're looking for the appearance of this pattern. Okay. Here's an example of an ascending triangle. Nice trend in. That's the most important. So you want to start by looking for a trend like this. Okay, when you're looking for this pattern, look for this trend. This has got nice resistance right here. Pretty decent higher lows. I didn't quite draw that all the way up to this point, but the RSI divergence is really nice on this one. And obviously it broke a long ways. This is a really, really hard trend into this pattern. The divergence is nice. The support level is pretty good. I mean, there's a lot of wicks here, but they're all, one of the things I've always said is a line is never just a line, it's always a zone. So think in terms of a zone here where price is being supported. Here's another nice example. This is a pretty good support level as well. This is a Euro Yen daily chart. Let's see, this one goes back to November of last year. Here's a Euro Swiss. Nice downtrend in, lots of support. This is an active trade. This is today. This is a daily chart. This is today. This thing goes all the way back to September of last year. So when this thing breaks, it's probably going to be pretty big. Divergence. You guys getting the idea here? These are the things you look for. This is notch too. Like I say, this is an active chart. Well, this is a picture of an active chart, but this was shot today. So, um, watch for this thing to break below this level here. Could go for some distance. Okay, I could not, in good conscience, show you a bunch of successfuls without showing you a failure. You've got to understand that they don't work every single time, and that's the reason why you have to be careful to manage your risk. Um, Never bet the farm. Things. You use stop losses, risk a small percentage on each trade. Some of them win, some of them don't. And this is an example of one that didn't. It had nice divergence. It had a great trend in. It had lower highs. It had fairly good support down here. And depending on where you drew this line, you might have actually taken this trade on this break right here. But obviously it was a failure. It was a head fake. Things happen. So always be prepared to take your stop. There are more details on this trade in the blog post. I've linked it below this video, so you should be able to find the actual blog post and the details on how to handle this trade. Summary: initial rally, the initial trend, the most important thing. Don't forget that. Then this pattern is fairly easy to recognize. Practice. Look at charts. Look at lots of charts. I've looked at charts for 15 years now. These things will jump right out at you after you get used to looking at them. And typically these triangle patterns will break in the direction of the initial trend. Obviously, not all of them do. Always confirm it in some way. The divergence on the RSI is a great suggestion for confirming this trend or this trade, this pattern. Okay, I'm going to get into the really important stuff now. What I feel is the really important stuff. It's the boring stuff that nobody wants to hear, but it's just as important as these strategies right here. Over the years, I've developed a few trading maxims. They're pretty much things I say to myself to keep from doing something stupid. And you know what? I'd do a lot of stupid things if I didn't say these things in my head as I'm doing it. I actually have a list of about 34 maxims, and I'll share them with you guys over time. But these are a few of them, and they're in no particular order. The numbers are just the order I added them to the list. There will always be another trade. If the trade does not set up the way you want it to, if it doesn't set up the way it's supposed to, if it doesn't follow your rules, move on, pass over it, skip it, do something else, go drink a cup of coffee, whatever. There will always be another trade. Don't get the FOMO syndrome, fear of missing out, FOMO, for those of you who are unfamiliar with that term. Do not get the FOMO syndrome. There will always be another trade. If you miss this one, you'll get a dozen more. This is my favorite maxim, and it's number one on my list because it was the first thing I put down when I made my list. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? I say this to myself all the time. Just before I click the do it button to enter a trade, this is what I say. Am I going to be stuck? In other words, I look at the downside of this trade. What if this goes against me? What if this doesn't do what I expect it to do? Have I covered myself so that I don't wish that I was out? Because I would rather be out of a trade wishing I was in it than to be in a trade wishing I was out of it. And if any of you have traded for more than 5 minutes, I'm sure that you've been in a trade and wished you were not in that trade. So say this to yourself. Every time you click the do it button, would you rather be in a trade wishing you were out or out of a trade wishing you were in? Maxim number 8, your first job is protecting your trading account. If you don't have a trading account, you're not trading anymore. So don't blow out your trading account. Take it from one who's blown out his trading account numerous times in the 14, 15 years I've been trading. I've blown out 3 complete trading accounts during that time. Don't do it. It's unpleasant. And then you don't trade. I mean, you know, you might miss a trade, or if you take your stop when you should take your stop, then you're protecting your trading account. But don't think, well, it's going to come back. I'm going to get this one. It's going to do what I want it to do. Because the market has way more capacity to do the wrong thing as far as your account is concerned than you have trading account to hold on to a trade wishing. Wishing is not a trading strategy. Maxim number 6, some of you guys who've been in my trading room know we call this Protocol 6. Protocol 6 is there's no such thing as too much coffee. I know we got some folks in there that don't drink coffee. Maybe you drink tea. It applies. Maybe you drink Mountain Dew. Okay, anybody have any questions? This went a little quicker than I expected, but you guys understand this strategy? I'll be glad to answer whatever questions you may have. If you don't have any right now and you have some later, just post them in the chat and I will try to get back within 48 hours or so and answer your questions. Okay. Enter the trade when it breaks out. When it breaks out of the triangle. Ken, I'll be glad to show you the Euro slide. That's not it. Right there. Euro Swissy. This is nice. It's setting up. It's a daily chart of the Euro Swissy. It's been setting up since August. Nice trend in, winding up. Here's the line. As soon as it breaks this line, I will be short. Mark, I use a variety of different indicators, but I've found that the RSI is probably the best for looking for a divergence for this particular pattern. Last week, I did a video on the currency strength indicators, and I definitely use that currency strength indicator for signals on the daily chart. So the 4-hour on the daily chart. So this is nice. It's been setting up a long time. It could be a while before it triggers because it's a long way from the apex of this triangle. Aaron, yes, absolutely. Any time frame. This is a powerful signal, a powerful pattern. Whenever price winds up like this, anytime you have price winding up, and when I say winding up, I mean an ever decreasing range. Price is winding up and it's going to break out one way or another. And when it does, it usually breaks out with a lot of power because there are a lot of traders that are watching this and waiting for it to break out and are ready to take the trade whenever it breaks out. Now, typically these triangles and flag patterns break in the same direction as the incoming trend, but they don't always. And you can actually trade them in either direction if it breaks out of this top, but that is just not as high a probability trade as looking for the break from this support level. Because not only do you have a price level that a lot of traders are going to be looking at, in addition to this wind up that's happening right here, because these support levels typically go back. If you look back on the charts, you'll find out that when you have a descending triangle like this or an ascending triangle, the support or resistance level is probably historically a very strong support or resistance level that's held price a lot in the past. So there are a lot of traders that are looking at this level for various reasons. Let's see, anybody else have any questions? You're welcome, Aaron. Okay, if you guys don't have any questions, if you like this, please click the thumbs up button below the video, subscribe to our channel, hit the bell so you'll be notified anytime we have new content. You guys have a great day, and I will see you next week. We're going to try to do these webinars every week. They're going to try to be, we're going to try to make them at 9 a.m. New York time on Wednesdays. So I say try because, you know, stuff happens sometimes, you know. Volume profile, Osama, absolutely. I love the volume profile. And last week's video, I showed you that I use that a lot in to confirm moves. Yeah, Mark, you're right. Euro USD is definitely a stop loss hunting ground. I use this for, you can use this for any instrument. Okay. All right. You guys have a great day, and I'll see you next week.